Real estate versus the stock market. Which one will make you more money? It's a debate that every investor faces at some point, and today we're getting into the nitty-gritty of both. We'll break down the numbers, the strategies, and the pros and cons so you can make the smartest decision for growing your wealth. Let's start with real estate. Real estate has often outperformed the stock market, especially when you consider key advantages like cash flow, appreciation, and tax benefits through depreciation. When done right, real estate can give you a higher IRR, internal rate of return, typically 15% or more. And when you're shooting for a good cash-on-cash return, you should aim for 10% or higher. These are the kinds of numbers that can help build long-term wealth. You've got monthly cash flow from rental properties, while the value of the property appreciates over time. Plus, don't forget the tax benefits, like depreciation, which can reduce your taxable income and put more money back in your pocket. But real estate comes with its share of headaches. You've got to manage tenants, repairs, property maintenance. It's not exactly a hands-off investment, and the real estate market is imperfect. It's not like the stock market where everyone has the same information. You've got to be savvy, do your research, and hunt for the right deals. On the other hand, we have the stock market. It's a more efficient and transparent market. Everyone has access to the same information. If you're buying Apple, Google, or Tesla, you're playing in a field where all the data is public, and everyone has the same shot at making informed decisions. One big advantage? Liquidity. You can buy and sell stocks instantly. No waiting for a buyer or tenant, no closing delays. And with a smaller capital requirement, you can start investing in stocks with just a few bucks. Over time, the stock market has shown solid growth, especially if you reinvest dividends and let your portfolio grow through compound interest. But here's the thing. The stock market is volatile. Prices can swing based on world events, economic factors, or even a single headline. While it has grown over time, it's not for the faint of heart. And you've got to be prepared for the ups and downs. Here's where both real estate and stocks get tricky: artificial fluctuations. In both markets, there are times where prices are inflated or impacted by outside factors, whether it's economic policy, interest rates, or global events. This can make certain times poor for purchasing each asset class. But here's the key. Long-term investing is where both asset classes shine. If you adopt a strategy of buying and holding over the long run, both real estate and the stock market have the potential to produce significant returns. Timing the market perfectly is nearly impossible, but playing the long game can smooth out those bumps. But make no mistake, the math matters, especially in real estate. If you're not running the numbers, you're gambling. When it comes to real estate, you need to focus on tools like the cap rate, cash-on-cash return, and IRR to evaluate your deals. And let's not forget about your exit strategy. Whether you're planning to sell the property down the line or execute a refinance strategy, these details can make or break your investment. You've got to calculate your returns carefully before jumping in. The right deal can make you a lot of money, but only if you've done the homework. On the stock market side, the same rule applies. Run the numbers. You need to understand your risk, potential growth, and how compound interest can work in your favor over time. So which one will make you more money? Real estate or the stock market? It depends on your goals, risk tolerance, and how hands-on you want to be. Real estate offers cash flow, higher IRR, and long-term appreciation, but comes with headaches and the need for careful calculations. The stock market offers liquidity and easy access, but with more volatility and fewer tax benefits. And here's the best part: you don't have to choose one. A smart investor can use both strategies to diversify and grow wealth over time. Real estate for steady cash flow and higher IRR, and stocks for long-term growth and liquidity. Why not take advantage of both? So what's it going to be, real estate or the stock market? Remember, the key to making money in either is running the numbers, having a strategy, and staying consistent. No matter which path you choose, smart investing is the way to build real wealth over time. Be sure to like this video if you found it helpful, and subscribe for more tips on building wealth. Now go make your money work for you.